Hello and welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. As we come to the close of this calendar year, a lot of things seem fluid. It's not clear to us how the next few months are going to pan out, both at an economic level as well as at the level of geopolitical tensions. The war between Russia and Ukraine seems to be continuing, very little signs that it would end soon. The COVID-19 pandemic is rearing its head again in different parts of the world. But if we have to cut out the noise and look at a few things that could matter, maybe not an exhaustive list, but a clutch, what would those be? Let's dive in. First off, let's look at India's economic growth. India's GDP grew at 13.5% for the quarter ended June this year. But that was probably because of a low base effect of the same period the previous year. Growth also quickly slowed to about 6.3% in the subsequent quarter. Estimates for the year that will end in March 2023 are at about 6.7% by the RBI. The World Bank, interestingly, is far more optimistic, saying India will grow at 6.9% for this fiscal year. That was an upward revision from the earlier estimate of the World Bank's 6.5% outlook. But if we look at core sector growth, the growth has been bumpy. And why core sector? Because it comprises 8 sectors, including manufacturing, mining, power generation, which are all good lead indicators for macroeconomic performance. If you look at core sector growth, it was really low at 0.1% in October from a year earlier. And that was a slide from 7.8% seen in September. Again, in August, it was at a lower 3.3%. So there's no trend that is evident. Only time will tell whether this number, the latest that we've seen in October, is a harbinger of things to come from a looming global recession. The next metric you should watch out for is inflation. After staying above the RBI's upper tolerance limit of 6% since January this year, retail inflation came down to 5.88% in November. It does look like a respite, but it may be just temporary, because the RBI's own estimate for inflation for the last 2 quarters of this fiscal, which will end in March 2023, are that it would be above 6% or in that range, thereabouts. RBI's estimate for inflation in the first 2 quarters of next financial year are at 5% and 5.4% respectively. But evidence of lower inflation for just 1 month may not be enough for the RBI to put a pause on raising benchmark interest rates. Since April this year, the Reserve Bank has raised rates by 225 basis points. As an aside, 100 basis points make for 1 percentage point. These rates indirectly influence the auto loan rates or the home loan rates that you and I would pay when we go and borrow at a bank. The aim for central banks across the world when they raise rates is to make it costlier to borrow and consume, and hence dampen prices so as to be able to control inflation. There have been calls recently for the RBI to at least pause raising rates so that economic growth could be given an impetus. But the RBI feels it may be too early to let go of its focus on inflation. The behavior of the rupee against the US dollar has also lent concern to policymakers. As of Monday, the rupee closed at 82.65 against the dollar. Most analysts believe that it will be trade in this range, maybe breach 83 and then come back to settle at slightly lower levels. An economist we spoke to was emphatic that in recent times, after every period of economic turmoil, the rupee always recovers some, if not all, of the ground that it had lost during the period of turmoil. The rupee typically reacts when foreign portfolio investors exit financial markets in India, reacting to interest rate changes in the West. But that's not the only thing that the rupee reacts to. It also reacts to changes in the oil prices internationally. After all, India as a country imports 85% of its oil needs. And if oil prices go significantly up, traders put downward pressure on the rupee because there will be a demand for dollars in the near future. Fortunately for us, global oil prices have been far more benign in the recent past than they were earlier. The RBI's estimates for GDP growth assumed $100 per barrel for the Indian oil basket. More recently, as of last week, the Indian basket was trading at $77.2 per barrel as per oilprice.com. With Russian Urals crude coming to India at heavy discounts to the Brent price, things look far more positive for India on the oil front than they did when war broke out in Europe in February 2022 and Brent crude raced upwards, touching nearly lifetime highs. Like oil, other commodity prices have seen a decline. Steel, for example, has come down by 30% between April and December. But declining commodity prices may not always be good news. They may be indicative of a recession working itself up. For example, in the West, India's own trade data for the last 2 months has not been very encouraging. Our exports have been declining but contracted for the first time in October since February 2021. And in November, they showed some very weak expansion. The China Plus One strategy will be the thing to watch out for in 2023. In 2019, the Indian government cut tax rates applicable to new manufacturing units in a bid to attract more investments, but investment flow has remained a trickle. Even with global companies looking to de-risk and add options to their China supply chains, the likes of Vietnam and Indonesia have benefited more. Now there is talk that companies are looking at an India strategy. Srivats Ram, MD and CEO of Wheels India Limited, says that companies globally are setting themselves targets for sourcing from India running into billions of dollars. But this, he says, would require a risk-taking ability on part of Indian vendors and make those investments. Whether this trickle would transform into an avalanche in 2023 still remains to be seen. Big tech and regulation. In the West, this is becoming somewhat of a trend. And in India too, regulators and policymakers are looking seriously at big technology companies and reviewing whether such dominant positions are leading to misuse of powers. In October, the Competition Commission of India levied 2 penalties across 2 cases on Google totaling more than 2,000 crore. One was to do with the Play Store policies of Google, the other related to Android mobile devices. Google is currently appealing the first ruling at the NCLAT. Watch out for the scrutiny of such big tech firms' dominant positions by the authorities in India in the coming year. A Parliamentary Standing Committee on Finance has called the digital ad business a monopolistic threat and has urged the centre to act on such issues early rather than wait for the threat to become pervasive and then react to it. The panel wants legislation afresh specifically for digital competition in order to ensure a fair ecosystem in India. Artificial intelligence. I'm sure you would have heard of ChatGPT from OpenAI.com. It seems far more evolved than the average online search engine. You ask a single line worth of a question and it throws back at you paras of credible information, often as if a knowledgeable person is answering you with context, and not just as a clutch of relevant URLs based on some intelligent search algorithm. I say often because ChatGPT 2 seems prone to errors. So try this on ChatGPT the next time you have a few free minutes. This is a query I found on Twitter, so it's not my own. Try asking this question: what is the fastest marine mammal? And it gives you answers around sailfish and falcons, which are obviously not mammals. You ask then a pointed question around these 2 species, and it immediately apologizes for its error. This is an improvement from the first time I tried this question some 3 weeks ago, when I had to ask it to reconsider its first 2 responses, and then it apologized at the 3rd instance. Now it does so when we send in the second question. So I don't know how much learning, quote unquote, it does based on errors being pointed out. But maybe we are nitpicking. Once these glitches are fixed, then tools like ChatGPT may eventually change education and publishing as concepts on their heads. I would certainly watch where ChatGPT goes from here. As we wind down this episode of Business Matters, here's something interesting for you, especially if you're a person who loves predictions about the period ahead. This is something I spotted on Twitter and I loved it. Quote begins, "No matter how many people are speculating, no matter how familiar their faces, how good their makeup, how well they are lit, no matter how many weeks they appear before us in person or in columns, it remains true that none of them knows what the future holds." This was attributed to Michael Crichton in a tweet by Mark Andreessen of Netscape fame. That's it for now from Business Matters this week. See you again next week, and here's hoping all of us will have a lovely year ahead.